What is up, everybody? Today I'm making this trade recap because I'm very upset with myself. I've been upset with myself for the past month for my psychology, man. I just simply can't grasp the urge to execute an A+ setup when it presents itself. I'm going to be completely transparent here. I've been scared of losing these 3 funded accounts when I already have 2 funded accounts that already pass in backup. I think the reason why I'm scared to trade on these accounts, especially because I'm 1 trade away from blowing them, is because they're my first evals I've ever passed. I don't know. I hold something with them in my heart that I just can't seem to grasp. But it's time for me to man up, man. This life isn't gonna be for me if I continue to make these same psychological mistakes. And I'm probably gonna end up posting a YouTube video about this because I'm just really upset with myself, man. And I gotta be transparent. But without further ado, let's go into why today was a peak day. There was like 2-3 setups that you should have taken if, psychologically you guys are good, you trust your model. My model presented itself 3 times and, I just simply didn't capitalize on it. That's a skill issue. That's a problem. But I'm man enough to own up to it, man, and I'm willing to take that change, right? Is that trade going to play out? Whoa, hold up. Let's see if this is going to play out. Okay, so it's FOMC right now, but we may have something here. What is this? MQ? Why is it on auto? Can we see something to these low resistance lows here? Where am I? What is this? There. Something like this. And that's 90 points, bro. Damn. 2 minute? Jeez, bro. Okay, screw that. See, 1 trade away from blowing them. See, $600, 3 accounts. I'm like 1 trade away from blowing these accounts. Anyway, back to the video. So on the higher time frame, what do we have, right? We're within a range of price action, bro. We're within a range of price action, and it is kind of hard to determine a bias off of this, right? So this is kind of where you set your conditions, right? Above us, we have an hourly internal high. Below us, we have an hourly internal low. And we just tapped into a monthly fair value gap, right? So could you see longs? Yeah, why? Because we're disrespecting this premium gap, but we're also touching this discounted monthly gap, right? If you go here, the 50% marks right here, right? So you could see us, reject off of this monthly discounted gap, but you could also see us go lower, because why not, right? Why could you see us go lower? Because you look on the higher time frame, right? We have a bunch of just stacked lows, right? We have this low right here, this low right here, this low. This low's a session low. It's a London low, so that's one of the highest draws in liquidity where price wants to go. Hourly internal low, also a pretty strong draw in liquidity, and just a bunch of stacked low resistance lows right here that price would want to take out if it wants to continue being bullish, right? But we can't decide. If we can't decide our bias on the higher time frame, right? Because we're in a range of hourly candles. Let's go to the 30-minute and see what we got, right? On the 30-minute, what do we have, right? On the 30-minute, we're tapping into this 30-minute gap, right? So now we can set our conditions for us for the day, right? If we want to be bullish, right, we could see price, come up here, disrespect this 30-minute, come down, something like this, and show straight, bullish reaction out of it. On the contrary, if we want to be bearish, bro, we could see price, come down, tap into this gap, and continue that bearish bias towards all these, low resistance lows, right? That is completely valid too, right? So that's where you set your if then, if that statements, right? If we're bullish, we'll do this. If we're bearish, we'll do this instead, right? So that was my bias coming into the day, right? I also knew we had FOMC, and FOMC has been, pre-market FOMC has been horrible for like the past couple of months. I remember I lost a trade back in, was it March? Because I took a trade during FOMC, pre-FOMC, and it was just it was a really choppy trade. And I told myself, oh, I'm never gonna trade FOMC, again. I'm just gonna wait. And same thing with like April, May, June. I don't really remember June. I don't think we had FOMC in June. Probably did. I don't remember. But this price action was peak though. But I came onto the day with like risk off, right? But with I came into the day with like really risk off. Sorry, I stuttered, but if I see an opportunity to capitalize, if I see good price action, clear structure, take a trade, you know what I'm saying? So coming into the day, what did we end up doing, right? Well, 930 ended up generating liquidity towards this internal low, right? You see, swing low, boom, we're tapping into this 30-minute gap now. So we're generating liquidity towards these draws, right? Towards all of these draws, not taking out the targets initially. Because if we took out this target here, right, off open, we could be like, oh, we could have a Judas here, right? Why? AMD, manipulation, Judas towards these 30 minutes, towards maybe even these session highs over here. I don't know, but that didn't end up playing out. But the Judas would have played out if you just get your piece of pie to 9:30 open, right? So what did 9:30 do? Generate liquidity, pushed up higher, tapping into this 30-minute, tapping into this 15-minute. And what does our 30-minute gap become? Our 30-minute gap becomes a sponsored move, right? Why? Because tapping into a 30-minute while also tapping into a 15-minute, right? A premium 15-minute. Sorry, this is our discounted 15-minute. This is our premium. So this is our premium 15-minute. Now, what do we see off of this 15-minute, right? We see straight rejection, bro. Look at this rejection off of this 15-minute. Boom, look at that candle. I'm pretty sure that was inversing a 2-minute. Now, your first trade could have been off of this 2-minute stop at the high. That worked perfectly, right? You'll get a little bit of consolidation here, but you'll end up taking out your draw. So the first trade was here, right, off of this 2-minute gap right here. You know, with high time frame, 30-minute gap tap, 15-minute. And you could have just target either 9:30 open, 100 points, this internal low for an extra couple points, or even, you know, be ballsy and target all the way down here. But this 2-minute would eventually, you know, look, play out. Boom, 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 boom. This 2-minute eventually played out. So that was the first A+ trade of the day. Now, what could you have done if you wanted to be a little more disciplinary, if you wanted to see a little more confirmation that, okay, cool, we actually might go down to these draws, right? What did we leave on the 15-minute, right? We left a huge rejection wick, right? Creating a rejection block, right? That's when a wick goes into a fair value gap and we leave nothing but a wick, right? Our body could be here, but look at this rejection wick, bro. That is insane, bro. That shows that we truly want to be bearish to me. And what do we have down here? Just more LR, bro. LR we want to take, actually, when we took that out at 9:30, sorry. But what do we have down here? Stacked lows. So we still have some crazy stack lows down here that we want to take out. So anyway, we have this rejection block, right? Also, what do we have? We have the highest form of liquidity sweep, which is a turtle soup, right? It's when, whoa, that was weird. It's when we have, you know, say we have an internal high, right? In this case, right? And we sweep that high and we leave nothing but a wick. That is a turtle soup. It is one of the highest forms of a liquidity sweep ever to be known within the trading space. It is a key point. Also, what is that turtle soup sweeping out? The 30-minute internal high from the beginning of the session, right? Boom, swept out that internal high. What do we leave? Wick, rejection block. Now, what can we use with this rejection block, right? With this rejection block, we could use it as a PDA right now. We can see price consolidate, right? Okay, cool, and we can see price tap into it and use it as a form of PDA to see distribution out of it. And that is exactly what I would have used my trade off of, right? This rejection block. Also, you can see ES is also in a perfect spot to distribute. Higher time frame, we have the same lows, I'm pretty sure. Yeah, we still have all these stacked lows on ES. Also, what do we have? We have a crazy bearish divergence within the market, right? We're creating lower lows while NASDAQ is creating higher highs. So that's a sign that we want to be bearish, right? So one, checklist, high time frame PD rate, low time frame PD rate are, you know, distribution leg, high time frame divergence also aligned with a high time frame internal divergence, right? Where NASDAQ creates this 1-minute SMT right around here. Boom, right there. Boom, 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 right there. This internal SMT. Also, what do we notice, right? We notice a clear AMD structure. Accumulation, manipulate into this 15-minute. Now, what is this candle doing? Distributing, right? That is our distribution candle. What do we have here? We have a 1-minute IFEG, a 1-minute CISD with a 30-second IFEG right here, right? It's kind of small, but you can see it's right there, right? And that's our PO3, accumulation, manipulation, and bro. I wish I took this, man. I don't understand why I didn't take this. This is making me mad, bro. But I'm making this trade recap because this is literally my model, and I got to teach myself what my model is again, obviously. And teach you guys, too, what a perfect A+ trade setup is. Hopefully, you guys can just execute off of it, right? Now, the best form of entry is a CISD plus IFE, right? Imagine if this 1-minute kind of closed up here without a CISD. It still would have been a good trade, but giving that CISD just gives us extra confirmation that, you know, all right, cool. At the least, we are going to go down to this 930 wick, right? We're going to go down to these wicks and at some point hit these internal lows, right? You could have held, to these internal lows. And what did price do after that entry? One, hit our break-even point. We're good. And we hit the internal low, right? You could have been out here with the 1-to-1, maybe around here. Next candle. Boom, yeah. You could have been out here with the 1-to-1, or you could have been ballsy like I would have done and held to this London low right here. Perfect. That is beautiful price action, bro. That's insane. Stop at the wick high or stop at this body. I probably would have had my stop around, EQ of this right here. I had it. I put it here because I know this is a protected high, and if I see, price come up to here, like I just expect price to wick me out. So having my stop like right here at 60 points too, it's a lot of points. It's chill. Also gonna put it here, maybe at the CE of this rejection block, but I thought right here was pretty chill, like 64 points. And that was setup one. So what did we have? High time frame PD array, we had a 30-minute. Also high time frame sweep, we had a turtle sweep with a 30-minute. Distribution gap, 15-minute. Internal SMT, external SMT, extra confirmation with that rejection block, and we had an A plus entry trigger with a 30-second IFEG and 1 minute CISD. Great break-even point at this 930 low. Great DOL with this internal low and London low, also targeting all these lows. Now, that was trade number one. A plus trade in my scenario. I'm very, very mad that I didn't take it. But let's go back to our second trade. So right now, in our third trade, because we have two trades right now that we could have taken, right? The 2-minute and the kind of later entry for that 2-minute. Now, coming on to the 5-minute, what do we create off of that move, right? We create a beautiful gap right here, right? We create a beautiful 5-minute gap right here, right? And what can we see with this 5-minute gap that we do, right? Obviously, we generate a lot of LR, right? We have this sell side liquidity down here. We have a lot of we have this great sell side liquidity here, and we tap into this 5-minute gap up here, right? Also, what do we do on that 5-minute gap, right? We manipulate that internal high. Leave a great wick, also creating another turtle soup right here, boom, right here, where we leave nothing but a wick off that high, right? We don't close above the body, just sweeping out the high. We close below the body and just wick it out, right? Also creating another rejection block. But this trade isn't based off rejection block. This trade is based off just a simple IFEG play and a turtle soup. Also A plus. Why is this A plus 1? You're trading with the trend. And you retrace into a gap, leaving a bunch of LR here. That can be taken out, leading up to some sell side liquidity. Also, if I'm not wrong, we're probably in the 50% of this range. This New York AM, let's see. Kinda. You're like a tick away, which is kind of risky because if you're taking a trade, I think the IFEG was 30-second. Yeah, it's 30-second IFEG. You have good reaction off of that 5-minute, also off that turtle soup. A bunch of LR. The only risky part about this trade is that you barely tap the 0.5 of the range, right? You barely tap this 0.5, so you kind of have a stop hunt here. Maybe you could have put your stop up here. But, I mean, this trade played out perfectly. The distribution was enough to, say that, all right, we're going to go lower. But I guarantee if we hit this, you probably would have found another entry to continue going lower. This 50%. But we were close enough to it. This was still a valid entry. You have a 30-second IFEG. Break even, I would have, probably not gone break even. Maybe at the 50% mark of this leg. Let's see. Maybe break even at this 50% mark. Let me delete this other one. Meep. And let's see this play out. Boom. IFEG entry right there. Boom. Boom. Break even there. Consolidate and straight to your draw, bro. Beautiful, beautiful, beautiful trade, man. This is peak price action. There are 3 scenarios you could have taken. All 3 scenarios were A+ scenarios, in my opinion. And yeah, it's just super unfortunate that my psychology hasn't been on point this whole month. I haven't traded on my funded accounts in a minute. I've been trading straight evals. I passed 2 Tradify accounts, thank God. So I have a backup plan, but I seriously need to get into the habit of just executing trades. I see that my model, presents itself daily. It works perfectly. And I really see now, as, kind of intermediate trader now, that it's all in your head, man. The key to profitability is that if you can be okay with losses, you can be okay, taking trades that aren't good and not doing anything about it. Be okay winning, not getting excited over fake money. This is literally fake money, man. And I still can't grasp that. And I need to let go, man. I just simply need to let go and just, let my hands do all the talking for me, bro. Just press that button, set my stop loss where it's protected, set my take profit where it's valid to say take profit, and just let my trade ride. Go break even when needed, and that's it, bro. It's really disappointing for me. I could have been up 5 figures. I think I could have been up 5 figures today, maybe 4 figures. I don't know. I would have been up a decent amount today based off these 3 trades, but It's unfortunate, man, and you can't do nothing about it except journal. That's why I'm making this YouTube video. I'm journaling this to see like what an A plus scenario looks like to me, right? This was beautiful price action, man. Pure accumulation, nice real manipulation into this 15-minute rejection block. Distribute again, low resistance, manipulate higher into this 5-minute turtle soup. Didn't tap that 50% mark, but it's okay. Great distribution through the leg and break even point at the 50% mark. Take profit. Really unfortunate, boys, but I hope you guys did dub out. I hope you guys did catch an A plus trade. Let's see where we're at today right now with FOMC. Let's see what we're doing right now. Wow, just continue dumping. And yeah, FOMC printed higher, and then we're kind of just ranging right now. Sweeping this. Maybe we see some kind of reaction like this higher. But I think like I told myself, oh, I'm going to look at FOMC, but honestly, I'm going to stop trading today. And just come back tomorrow stronger, bro. There's nothing I can do except journal, man. And I promised to myself that this trade recap is the last one where I'm saying, like, I was scared to enter, man. It's going to change, man. I'm telling you, I'm documenting this, bro, because it's going to be an edit of me one day talking about this. And looking back at it, bro, I'm going to be like, dude, there's no way, like, you didn't take something like this. You're so stupid. That's insane, man. Like, I know it's all gonna work out, bro. It's all going to work out for me. And I'm just super grateful for this journey. I'm super blessed to be able to read price like this, bro. I couldn't even tell you a year ago what a rejection block is, or an SMT, or an internal high. Like, that's ridiculous to me. Now I can perfectly mark this stuff off. Now it just all comes to pressing a button, and that's it. Like, that's it, man. Is that on paper? I hope that's on paper. Yeah, it's on paper. All I gotta do is just press a button, bro. And that's it. Well, that's about it. I'm not editing this YouTube video. It's gonna be raw footage, so if I stutter, my bad. This is raw and authentic. I love and appreciate you guys for watching. Man. This is a journey that I'm on, that we're on together, and I promise you guys that it's all gonna be worth it in the end, man. So love for you guys to watch and tag along in the journey. And I'll catch you guys in the next trade recap. I guarantee you guys, I will be trading this week, and we will be green on the week. I promise you that, man. So have a blessed day, guys. Love you guys.